Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So we have a lot of things to cover on our econ show. So we weren't able to do one last week because things were a bit crazy. So I apologize. So we'll catch up on some of the things that we missed, some of the things that have happened since then. You know, segment one, we're going to look at some of the geopolitical hotspots that have started to ignite again, and what does that mean for some stability in the region. And where are we going on a global macro basis when you look at industrials, when you look at food, because you're starting to see some of these things rise again. And when you look at inflation on food, when you look at some of that, the economic prowess is weakening and you're starting to see some of those pressures. And again, that builds up, that creates some of that backlash and anger that sits beneath the surface. And now we're starting to see some of it ignite. And remember, some of these things, which we'll talk about Pakistan for a moment, but there's always something beneath the surface, and there had been something beneath the surface. There's been a lot of struggle on an economic level, and now you're seeing it erupt. And we're just going to talk about that one particularly, just because something similar is playing out in a lot of other areas, and things are right on the precipice of just one event to create the catalyst needed to see some of these issues starting to ignite. Then we're going to lead into why we believe the Fed will raise rates again in June. What are some of the things that we're seeing in the markets? How is that looking on the rate side, on what was being predicted in the bond markets? Then we're going to talk about the consumer. So one of the things that we were saying was that the consumer started to weaken in Q1, started out fairly strong, and then started to kind of peak in about March, and then started to weaken as we got to the back half of March. And so far we've seen that only continue. And we want to look at why. Where are we seeing that? What are some of the issues, and what does that mean for the economy going forward? Then we want to look at the ECB. So the ECB is finally starting to change its tune and saying, oh, we might have to raise rates again. It's like, really? You think? It's like, guys, come on. I'm some guy sitting in New York talking about this, and I knew that. So welcome to the party, I guess. So we'll talk about why that's the case and how some of the economic data has started to weaken a bit after having some decent recoveries in some things. Not into growth, but you had some bounce, and now you're starting to see some softness. And then we want to talk about China. So there's been a lot of pieces that have come out recently. Several of them are actually showing that there's no stimulus. They've actually reduced liquidity again, and we want to talk about that. But they've also started cracking down on foreign companies. And if you look at the foreign direct investment and how there's already been a reduction of the amount of companies that want to invest in China, how is that going to continue? If you're cracking down on them, are people really going to want to come in and invest again? And somebody requested that we cover more on the Taiwan situation, and that we will touch on and talk about in more detail in segment 5. So with that being said, we're going to jump right into Pakistan, what's happening there. And I think it's important to put into perspective where China sits in this, because China also had a meeting in Pakistan actually right before a lot of this took place. And there were a lot of things that were happening prior to some of the things that have happened. So first, let's just take it in order. So the Afghan, Taliban, and Pakistan agreed on May 7th to cooperate on issues of mutual concern, included by increasing trade and reducing tensions along their border. That has been a sticking point, because there's different entities that view different people and groups different ways. So the Pakistan military also claimed that the two sides discussed the formalization of bilateral security. Improved relations between the Afghan Taliban and Pakistan would enhance the regional stability, but the Afghan Taliban's longstanding ties with the Tehrik-Taliban Pakistan, TTP militant group, which Pakistan considers a terrorist group, is going to limit how close they can get. So essentially, they'll say, look, we'll manage the border, we'll agree on the border, but we won't do much more, because when you look at what happened when the U.S. pulled out, the Tehrik, the TTP, was very instrumental in helping them essentially follow down as the Americans pulled out, following through and creating some of this support for the Taliban in the region. So it's unlikely you'd see them try to risk that. Then when you look at it in general, additionally, Afghan Taliban fighters generally remain, fairly undisciplined. When you look at the way some of the fighting has been and how it has gone cross-border, which was kind of the impetus for this. So again, it just, where's the leadership? What are their abilities to maintain it? And again, the agreement comes amid heightened tensions between Afghan Taliban and Pakistan, which is why they're trying to walk this back. And as we've said before, it's sparked several border issues, which again, they're essentially coming and saying, look, we'll respect the borders, but that's about it. So we don't see too much happening at the moment. But there is an interest from the perspective when you look at it from China. So that was May 7th. Then when we turn over and we look, so on Saturday, which was, so just going to pull up the calendar here. So Saturday, which was the 6th, so right before this, because remember, you have to think about where the Chinese are investing and why there's some of the concern about where is this happening, what are some of the issues there. So on Saturday, Foreign Minister Qin Gang was in Islamabad for the 5th Chinese-Afghan-Pakistan Foreign Ministers Dialogue. And again, so this happened on the 6th, and then the Taliban and Pakistan met on the 7th. And I can assure you, this was planned because they're like, look, you guys need to get things together because otherwise we're going to have to come in because security is an issue. And China, again, does not want to come in, but they want to increase their influence in the region. But if you just look at the quagmire that was created by Russia and then by the U.S., this is not a place that you can tread. You have to tread carefully. Let's put it that way. So Pakistan foreign minister, Afghan acting foreign minister, and the focus was security and counterterrorism, which I don't think it's a surprise on why. So despite nominal strong ties with Pakistan, terror attacks against Chinese nationals in the country have hurt those relationships. They've died down a bit, but they're still there. Beijing is also concerned about Afghanistan. What does that mean? Again, essentially, that's why on the 7th, reaffirming that they're going to respect the borders and protect those borders. Qin said that Afghan and Pakistan will further strengthen safety and security. China is ready to strengthen counterterrorism and security cooperation within the countries. Any form of terrorism, supporting or using terrorism and double standards on fighting terrorism is what they want to get. And just remember the double standard side. Don't forget that China's repressive Xinjiang policy is intended as an anti-extremism strategy. Beijing rejects foreign lectures on compassionate counterterrorism. Again, like your different pieces, but the three parties agreed to this key piece: address both symptoms and root causes and jointly respond to terrorism threats based on the principle of mutual respect and treating each other as equals. So that is something that is carried forward in that Afghan Taliban Pakistan meeting the next day. So for security, China having unstable neighbors butting against the Xinjiang is worrisome because remember, there's a fear that you'll bleed over and you'll start to see some of that anger bubble over into the Muslim, predominantly Muslim Xinjiang. And again, that's going to be a key piece. But realistically, as we all know, as those that have been following this as long as I have, it's very difficult to force a lot of these things on a counterterrorism side. But again, that's an important piece. So then when we look at the protests and Salif attacks in Pakistan, so you can see that a lot of the protests have happened at military installations, and there's a lot of reasons on why this is the case. So I'm just going to take a little bit from just kind of how we got to this point. So when you look at where the issues are, so according to the Islamabad police chief, the inquiry for which Khan was arrested relates to the Al-Qadir Trust case. So the case was where Khan and his wife allegedly obtained billions of rupees from a real estate firm in exchange for protecting the company in a money laundering case. So the NAB notified Khan of various corruption cases against him and requested his presence in the investigation. Khan legally challenged it. Sanaloo maintains that Khan's legal challenges failed, and because of that failure, alleged that continued refusal to present himself prompted the NAB to seek his arrest. Added that the government did not have Sanaloo added that the government did not have authority over the NAB and had not attempted to influence its decision to seek Khan's arrest. So the government's trying to distance itself, saying, look, this is something separate. We're not getting involved. But as we all know, everything is involved in different ways. And Khan has been very outspoken about some of the allegations and some of the things that have happened. So some of the things that have happened there to this point. So the chief of the Islamabad High Court initially criticized the arrest, calling on several government and law enforcement officials to explain its details and questioning its legality. However, the Islamabad High Court later declared the arrest legal. And then the arrest also prompted widespread condemnation from officials of Khan's Pakistan PTI party, with senior leader Shahroud calling the arrest an abduction. So again, that sparked a lot of this, which has happened to this point. Now, Khan and his PTI party have been locked in a political standoff since Khan was removed from office following the April 2022 no confidence vote in Pakistan parliament. Recently, the PTI sought to pressure the government into conducting fresh national elections by prematurely dissolving 2 provincial assemblies. So again, they're trying to shift and bring Khan back in. But now there's a disagreement between the Supreme Court, which has ordered Punjab's provincial election be held May 14th, and the Election Commission of Pakistan previously set Punjab's provincial election for October 8th. So so this could get worse if they delay because the vote is in 3 days. If that gets delayed because there's a view that the PTI would win in that election, if that's delayed, this is going to escalate again. Now, the PTI has been protesting and has caused fires in several of the Pakistan's military installations because they view this as more of almost like a military coup, and not a full one, just don't hear that. But they see this as a setup to protect what's happening. So the arrest has triggered nationwide protests and travel disruptions, and it's going to persist. And it's likely going to go up. And this arrest is going to bolster his popularity and again deepen some of those political instabilities, which are already there. The economy has been struggling. Inflation has been through the roof. Food is getting more and more expensive. So again, people are angry. And when you get angry, you get a lot of division when you look, because people dig in their heels in terms of what side that they're on. And that's why there is a concern on what this is going to look like going forward. So again, this is something to watch. And the reason why we bring it up is because this is similar to other places in the region. And this is why China is getting more involved, because they see the problems as potentially expanding. And that's going to be a very important thing to watch and to look at as we go forward, because China has interest there. They've invested billions into Pakistan. But you've seen, like, just if you look at where the Pakistan Chinese economic corridors are in that one to the right, you can see that the protests and some of the attacks on the military installations are getting closer and closer. And now if the military strikes back, as they've been called into some of these areas, then that's going to just escalate things further. And China's looking at this and be like, hey guys, like, we need to look at ways to protect some of the situation and to try to de-escalate. Now, another side of things, because foreign ministers met, and interesting that it happened in terms of timing. So foreign ministers from India and Pakistan traded accusations because they clearly continued to fight on different levels and they met in India on May 5th. So this was the first time Pakistan sent its foreign minister to India since 2011, which some observers speculated could portend to efforts to try to thaw some bilateral relations. But for anybody that's been listening to us, this is a hotbed that we don't see getting any better. Instead they just took time, each one to essentially reiterating the issues that they have with each country. And Pakistan's participation in the meeting was likely predominantly motivated by its desire to bolster relations and cooperation with regional countries, because remember, they met with India, then they were meeting with China, then they met with Afghanistan. So again, they were trying to create this view that they're trying to create some stability in the region. Again, but they said the same things, reiterated issues in general. There's Pakistan's foreign minister blamed India and its decision to revoke the predominantly Muslim Union territory of Kashmir's special autonomous status in 2019 for the two countries' frosty relations, prompting India's foreign ministry to imply that Pakistan supported military in Kashmir. So India-Pakistan relations not going anywhere. But again, you see some of these movements, but Pakistan had to show the support for, or at least trying to appease India, because when you look at where the Chinese-Pakistan border, that economic corridor goes, it is very close to Kashmir and some of this disputed areas, which continues to be a problem. Now, turning over to Russia, Ukraine, we haven't spoken about it in a minute, but I think it's important to talk a bit about what has happened. There's been a fairly strong stalemate. Some of the Russian offensives have stalled, if not stopped, because of lack of support from those on the ground, especially the Wagner groups that are complaining of not enough ammunition, not enough support, and they've essentially stopped a lot of these movements. Russia has taken some ground, but you can see that there hasn't been a huge change in terms of the positioning. And now there is a highly anticipated Ukrainian counter offensive that is expected to start imminently. And that's going to be a question of kind of where things are. And it's important to look at, because right now, Russia, Ukraine, Turkey are in negotiations to continue the Black Sea deal. And if you think about the two UAVs that Russia claimed Ukrainians sent to try to assassinate Putin, then you look at the commentary on how they're preparing for a counteroffensive. Now, when you look at these pieces, these political pieces, and you turn around and look at, okay, well, let's take a look at the Black Sea deal. 67 Ukrainian ships are waiting to be inspected, and Russia hasn't inspected any of them over the last 3 days. And so there's rumors and potential that Russia's doing this because they're going to get rid of the Black Sea deal. They've already come up with some sort of plan to sell more to and more into China, which means that they could essentially cut the Black Sea deal, hurt Ukraine, have them send more stuff through Eastern Europe, and essentially take a significant amount of flow out of the market, which is why we do think there is a good chance that the Black Sea deal does fall apart, and that would be a bigger problem for underlying grain prices. But again, we do see that there is likely a counteroffensive coming just to counter what has come. It started in areas in the south, just north of Melitopol in the island there. So there's like a river that comes down, and Ukraine has claimed control of the island there and has solidified their holdings. But again, you still have to cross the river to the next level, and that's going to be one to watch when you look at essentially Odessa or Kherson south, and then as you go east, because that's going to be a key piece as they try to push back and reclaim some of their positioning in the Black Sea. So now when we start looking at the food side, the war has redirected Ukraine's grain exports. When you look at where Ukraine is sending things, obviously Romania has shifted up. But when you look at 21 versus 22, Romania was not on the list. Poland was not on the list, and that's because their inability to get it into the Black Sea and beyond is sending it more into the other regions. But now look at Iran. Iran doesn't appear on it in 2022. Pakistan doesn't appear. Morocco, Tunisia. These are areas, again, cycling back to what we talked about with Pakistan. People are struggling to replace this Ukrainian cereal, this Ukrainian food, and it's driving up prices. So now when you look at Indonesia, you look at Iran, Pakistan, Morocco, Tunisia, this is a problem. And now Egypt, they've fallen down. How do you replace that? Now it's going into Romania, and then they're trying to kick it out into other areas, but you're increasing distance, you increase the chance of things going bad and spoiling. So again, this is a big problem when we look at some of the key pieces going forward. Now, when you start looking at some of the recent shortages of water, and when you look at some of the problems in terms of droughts, Spain is increasing. Canada is under drought warning. Some parts and key growing areas in the U.S. under drought warning. Argentina, massive drought warning, where to the point where it's beyond an alert. It's a huge problem. And Brazil's gotten better, but it started to worsen. So there is a big issue at this point in time in terms of where some of these things are going to go and how they're going to go going forward. Now, just for timing's sake, we're going to talk more about the Taiwan Strait in segment 5. But again, that's another point that we will want to look at. Central bank allocations to gold near all-time lows, but they are buying. So gold spot prices have come up. Central bank gold demand index has risen, but it still remains at a low point when you look over the last 23 years. As you can see, it was sold down pretty aggressively from 80 to 2000 and then bumped sideways. But one of the things that we've been talking about is that we expect some of that pivot to continue to go up. Now, when you look at the federal funds rate in the U.S., Fed market pricing for September 2023, again, continues to be elevated. The liquidity index continues to worsen. Again, and this is just kind of culminating things that we see as a problem. 12 euro JPY, and when you look at the dollar shortages, as you can see that there's dollar shortages in those regions. Again, why we see the dollar still finding some support in this level. And then Bloomberg index for liquidity in government bonds continues to tighten. And again, because their balance sheets are changing, because things are continuing to, again, ratchet down and pull some of this liquidity from the market. And you might think it's like, whoa, why are they doing this? It's because they dumped a significant amount in during 2020, 2021 that has to come out, because it wasn't like that was fresh liquidity and they haven't been putting liquidity in over the last 20 years. This is on top of what has been an ongoing liquidity, just, essentially party since 2008. And here is where it ends. And then looking at the central bank policy rates in developed markets, again, driving that up because they have to take the liquidity out. And you do that by, as you can see here, raising those rates. Then when you look at iron ore, steel prices in China, they fell considerably. When you look at India, inbound ocean TEUs into the U.S. falling, they're now back below 2019 levels. Again, both of these things are not strong points. These are not things that are saying that China is going to be strong, that their exports are going to be there. You're seeing that pressure, you're seeing that pull down, and this is why when we talk about China, we see a very muted response on a reopening side, which is going to put pressure into it in general. World manufacturing surveys, April global manufacturing PMI was down 0.2 of a point to 48.7, below the 50 threshold, which again just means that they're in contractions continuing. When you look at emerging markets, Asia ex-China is one of the only regions to accelerate over the month. But remember, we see things getting a bit problematic going forward. Back to the commentary about Central Asia, where some of those problems are continuing. 30% of countries stayed in expansion, of which 9% are slowing down, 21% accelerated. Thailand the most, 18% are recovering, including the US and Japan, but 52% deteriorated, with Italy being the most, which again is why when you look at it, we're not getting this massive drop down. It's just bumping along at this contractionary level. But it's not like it's all encompassing, like the world is ending. It's the death by 1,000 cuts, but it creates stress. There's so much stress that remains in the market, which is why we think that stuff like Pakistan is not going to be limited just to that country nor that region. World Manufacturing Survey's activity, giving you some of those breakdowns, activity components by country, 30% of countries stayed in expansion, and you're getting an idea of like how everyone remains really lumped in a deteriorating or decelerating basis. And again, none of this is supportive of growth. None of this is supportive of more activity, of this expansion, which again, we think is going to become a bigger problem as we head into the second half of the year. This just looks at the U.S. as an aggregate. Willingness to lend to consumers dropped again, indicates a worsening GDP outlook. So again, if the U.S. is worsening, the largest country in the world, biggest buyer in the world, well, it's going to be difficult for other nations to continue to strengthen. Central banks' net gold purchases, again, going up, but it's getting, it remains tight. So you're still seeing bank loan credit standards in the US, Europe, UK, Japanese banks going up. Gold purchases are going up, but again, it's still within a kind of a comfortable level, top end over the last 23 years, but we see that accelerating a bit, not because they're replacing the dollar, but because they're trying to stave off inflation. Because if you look over the last 23 years, yes, we had inflation fears. Yes, we had periods where inflation went up, but not to the sticky degree that we're at today. And again, 23 years of easy rate policy, zero interest rate policy being pervasive creates this bubble that, again, is why we think that things are different this time versus previous. Now you look at global food prices tick slightly higher in April, but the index is still down. But again, it's flatlining and turning higher at a very prominent point where the last time we were at these price levels, we had the Arab Spring, wheat wars, peasant uprising. So, which is why, again, we come back to Pakistan, we come back to Afghanistan, areas where instability is already likely, and then throw in the fact that the prices of food have turned higher. And then when you look at the Invesco Agriculture Fund, which factors in futures, it's actually accelerated a bit faster, which is why we see these pressure points, and getting rid of the Black Sea deal is only going to make that worse. Then you look at the Federal Reserve Bank global supply chain pressures. Again, we're not seeing the pressure anymore from the supply chain perspective. Things are back to normal. So these are not reasons for inflation. So, which is why the view was, which we have been saying from the beginning, was incorrect. Inflation was not getting better because supply chains weren't going to make inflation better. Inflation was grinding higher for a lot of other reasons. This was just, again, not to say that it wasn't adding to inflation, but it wasn't the driver of inflation. And I think that was where things were. So sure, this was going to get better, but it wasn't going to pull down the inflationary pressures that are out there. And again, so which is why the banks have to continue to tighten. Lending conditions are likely to tighten further when you look at what's coming up out of that sample. Things continue to get worse. Now, when you look at ASN manufacturing PMI, again, kind of pulling that out a bit, you can see that ASEAN manufacturing PMI improved. But then when you look at global manufacturing PMI, you can see, as similar to what we said before, has gotten a bit worse. Now, when you look at the different levels, again, just reiterating the fact that the main drivers of global growth kind of are right in that middle, where slightly expanding, slightly contracting, but again, it's really leading to no growth, which is why India and China are going to kind of be that swing capacity where we think people are expecting too much, and China continues to weaken again, and those leading indicators continue to point out something very similar. Composite output growth, again, maintaining gross GDP, again, kind of staying at these stable levels, but we see that getting a bit worse. Now, coming back to and kind of closing the loop on the inflation side, Chile copper production long ton is back, bounced, as you can see it normally does on the seasonal level. But again, it's still very low when you look at the last 10 years or so. It's not getting much better, and we're still not getting any pricing benefits. Pricing continues to weaken in China, even as, again, supply isn't there. There's not a huge amount of supply out there, but yet China continues to see builds in iron ore, in copper, as well as steel, which is why prices are coming down. So it's just going to be a matter of who blinks first, and does China sit there and dump some of this excess product into the market? We think they do. That'll drive down prices in the near term. But then when you look at the supply over the longer term, it's still an inflationary backdrop. So we could get some short-term deflation on the commodity side, but without renewed inflation, there's going to be a big issue in general, which again is going to become a pervasive problem. So that's what we have for you. I know this was a long section because we were talking about the geopolitics and how this feeds into it, but again, they are all linked, which is why we wanted to kind of show this in a broader sense and why this isn't going anywhere anytime soon, and the geopolitical risks are only going to increase because inflation is still out there. GDP growth is still a problem, and we're still going to see some of these underlying issues in general. So that's what we have for you today on this side. In the next segment, we're going to go deeper into the U.S. and what we think the Fed is going to do going forward.